Hello everyone, welcome to another video on final accounts with adjustments. In the last videos, we have learned about the adjustments related to bad debts, provision for doubtful debts, outstanding expenses, prepaid expenses, closing stock and depreciation on fixed assets. In this video, we are going to learn about 9 different adjustments in one problem. Hope these 3 videos will help you guys to solve any type of adjustments related to final accounts. Now let's see the problem. Here are our adjustments. First I'll go through the adjustments one by one, then we will prepare trading profit and loss account and balance sheet. Our first adjustment is related to closing stock. We all know that if closing stock is given as an adjustment, then we will mention the closing stock amount on the credit side of the trading account and also on the asset side of the balance sheet. If you guys want to know about the closing stock entries, then you can get that information in the first video of final accounts with adjustments. Link is available in the description box. If you guys are interested, you can watch it. Our next adjustment is related to accrued commission. In the question, the commission received is 1000. In the adjustment, accrued commission is 375. Accrued means accumulated or total. Let's understand this accrued commission with an example. Assume that ABC company is supposed to receive 500 commission from one of their customers on monthly basis. But the customer agreed to pay back to the company after 4 months. That means for 1 month the customer is supposed to pay 500 as commission. For 4 months the customer is supposed to pay 2000. Till the company receives the commission from the customer, the company calls this 2000 amount as accrued commission. In other words, we can say accrued commission is nothing but the commission which has been earned but not received. In this case, the company or the business considers accrued commission as an asset. Whenever we receive any income through cash or bank, then the entry will be cash or bank account debtor to respective income account. Here the transaction is related to commission. So the entry will be cash or bank account debtor to commission account. The entry for accrued income or accrued commission will be accrued commission account debtor to commission account. Here accrued commission is the asset account. Commission will be the income account. Let's post these journals into their respective ledgers. If we notice in the commission account, we are adding accrued commission to the commission account because accrued commission is the income which we will receive in future. So we are adding that to commission account. Once we balance all the ledger accounts, cash balance will appear on the debit side of the trial balance because cash is an asset. Commission balance will appear on the credit side of the trial balance because here commission received is an income. Finally, accrued commission balance will appear on the debit side of the trial balance because accrued commission is considered as an asset. Coming to the problem again. In the problem, accrued commission is given as an adjustment, not in the trial balance. So we will mention accrued commission in 2 places. Firstly, in the profit and loss account, we add accrued commission to the commission amount on the credit side. And also we will mention accrued commission amount on the asset side of the balance sheet. Our next adjustment is rent of 1000 has been received in advance. Rent received value in the trial balance is 3000. In this 3000, 1000 has been received in advance. Whenever we receive rent by cash, the entry will be cash account debtor to rent account. Amount is 3000. This 3000 is the total amount. This total amount includes advance amount also, which is 1000. Entry for income received in advance is rent account debtor to rent received in advance account. Amount is 1000. Here rent account is the income account. Rent received in advance account is the liability account because business considers advance income as liability. Let's post these 2 journals into respective ledgers. If we notice in the rent account, we are deducting advance amount from the total rent amount, because the rent that we have received in advance is not earned, which means we are supposed to receive the rent amount in future, but we have received it early. So we are deducting the advance amount from the total rent amount. As usual, after balancing the ledger accounts, cash balance will appear on the debit side of the trial balance and rent account balance will appear on the credit side of the trial balance, because rent received is an income. And rent received in advance account balance will appear on the credit side of the trial balance, because rent received in advance is considered as a liability. In the question, advance amount is given as an adjustment, not in the trial balance. So we will mention the advance amount in two places. In the profit and loss account, we will deduct the advance amount from the total rent amount on the credit side, and in the balance sheet, we will mention this advance amount on the liability side. Our next adjustment is charge interest on capital at 2%. Interest on capital means the business is paying some interest on the proprietor's capital, because as per the business entity concept, the business is separate or distinct from the person who owns it. Even though the capital is invested by the proprietor, as per the business entity concept, the proprietor is different from the business. So paying interest on the proprietor's capital is considered as an expense. In this case, the entry will be interest on capital account debtor to capital account. Since we have this interest on capital account in the adjustment, not in the trial balance, we will mention this interest on capital amount in two places. We mention interest on capital on the debit side of the profit and loss account, and also we'll add this interest on capital to the capital amount on the liability side of the balance sheet. Our next adjustment is a fire occurred on 25th March 2020 and goods costing 1000 were destroyed. These goods were fully insured and insurance company admitted the claim in full. This loss of stock by fire adjustment has three scenarios. First case is goods are fully insured and insurance company is okay to pay for the loss incurred. Second case, if goods are not insured at all. And third case, goods are insured but the insurance company agreed to pay the amount for the partial loss, not for the full loss. Let's discuss our first case. When the goods are insured and the insurance company agreed to pay the amount for the loss incurred. In this situation, the entries will be loss of stock by fire account debtor to trading account. And also, since the insurance company has agreed to pay the loss amount, the entry will be insurance claim account debtor to loss of stock by fire account. We all know that if we have any amount in the adjustments, we need to mention the adjustment amount in two places, at least in two places, according to the adjustment. In this case, we will mention by loss of stock by fire on the credit side of the trading account and also on the asset side of the balance sheet as insurance company. This is first case. Now we will discuss case 2. When the goods are not insured at all. In this situation, we will mention loss of stock by fire on the credit side of the trading account and also in the debit side of the profit and loss account as 2 loss of stock by fire. Now we will discuss case 3. Case 3 is goods are fully insured but the insurance company has agreed to pay the partial amount, not full amount. In this case, we will mention the adjustment amount in 3 places, not in 2 places. Let's understand this with an example. Loss of stock by fire is 10,000. Out of this, insurance company has agreed to pay only 5,000. Here, 10,000 is the overall loss amount. 5,000 loss will be recovered. Remaining 5,000 loss is not recovered. In this situation, 10,000 amount will show on the credit side of the trading account. And the recovered loss amount, that is 5,000 amount, we will show on the asset side of the balance sheet. And unrecovered amount, the remaining 5,000 amount will show on the debit side of the profit and loss account. Next adjustment is goods costing 1000 were distributed as samples but no entry has been passed. Business consider distributing goods for samples as sales promotion expenses. All selling and distribution expenses come on the debit side of the profit and loss account. In this case, the entry will be sales promotion expenses account debtor to purchases account. Here we are debiting to sales promotion expenses because whenever expenses increases, we debit it. And we are crediting to purchases because we need to deduct the total cost of samples from the purchases amount. When we purchase goods for cash, the entry will be purchase account debtor to cash account. If we post these two journals in the purchase ledger, cash comes on the debit side and sales promotion expenses comes on the credit side, which means we are deducting the samples amount from the total purchases. Since the adjustment says no entry has been recorded, we will deduct the samples amount from the purchases amount on the debit side of the trading account, and also we will mention two sales promotion expenses on the debit side of the profit and loss account. In case the adjustment says goods are distributed for staff welfare, even in this case, we deduct the amount from the purchases on the debit side of the trading account, and also we will mention two staff welfare expenses on the debit side of the profit and loss account. Next adjustment is stock valued at 1000 were used by owner for his personal use, the cost of which has not been adjusted in the books of account. We all know that goods taken by proprietor for personal use comes under drawings account. Entry will be drawings account debtor to purchase account. Since we have drawings amount in the adjustment, we will mention the drawings amount in two places. Firstly, we will deduct drawings amount from the purchases on the debit side of the trading account. Secondly, we will deduct the drawings amount from the capital on the liability side of the balance sheet. Next adjustment is manager is to get commission of 8% of the net profit after charging such commission. Manager's commission is like paying salary to the manager. So manager's commission is considered as an expense. Here commission is paid based on net profit. If we incur net loss while preparing profit and loss account, we don't have to pay any commission to the manager. Commission payable to manager can be in two ways. The first way is profit before charging such commission, and the second way is profit after charging such commission. Let's understand this with an example. Assume that after preparing the trading and profit and loss account, our net profit is 10,000. In the question it says 10% of net profit payable to manager as a commission before charging such commission. Then the way to calculate commission on net profit is 10,000 into 10 by 100. If the question says 10% of net profit payable to manager as commission after charging such commission, then the formula to calculate commission is 10,000 into 10 by 10 plus 100, which comes to 909. We will understand this while balancing profit and loss account. Our next adjustment is received goods from Rahul & Co. of 1000 on 27 March 2010, but the invoice of purchase was not recorded in the purchases book. Whenever we purchase goods on credit basis, the entry will be purchase account debtor to supplier account or creditor account. Since the adjustment says purchase amount is not recorded in purchases book, we mention the amount in two places. In the trading account, we add this amount to purchases, and also in the balance sheet, we will add this amount to the creditors on the liability side. Last adjustment is create a provision for discount on debtors at 2%. Whenever the customer is okay to pay the amount before the credit period, business may allow some discount for the customers who are likely to pay the amount little early than the credit period. Provision for discount on debtors is the estimated amount that the business has created to cope up with the future expense. Let's understand this with an example. Credit sale period is 1st January 2019. Due date for the customer to pay the amount back to the business is 2nd February 2020. So business may allow some kind of discount to the customer in the next year, but the sale happened in the current year. In order to record this transaction in books of accounts and also to meet the future expense, we have to mention the provision amount on the debit side of the profit and loss account, and also we will deduct this provision amount from the sundry debtors amount on the asset side of the balance sheet. In the problem, sundry debtors amount is 40,000 and 2% is the provision percentage. So the provision amount would be 800. This amount we will mention on the debit side of the profit and loss account, and also we will deduct this amount from the sundry debtors amount on the asset side of the balance sheet. We are done with the adjustments. Now we will prepare trading profit and loss account and balance sheet. Our first account is opening stock. This we will mention on the debit side of the trading account. Next account is purchases. We have 3 adjustments related to purchases which we have already calculated, and also we have returns outwards. Returns outwards amount we will deduct it from purchases. Now according to the adjustment, we will add or deduct the amount to the purchases amount. First adjustment is related to samples. We already discussed that samples are considered as sales promotion expenses. So we will deduct this amount from the purchases, and also we will mention this amount on the debit side of the profit and loss account. Second adjustment is related to drawings. This amount we will deduct from the purchases, and also we will deduct this amount from the capital on the liability side of the balance sheet. Third adjustment is we forgot to record the purchase entry. This amount we will add it to the purchases in the debit side of the trading account, and also we will add this amount in the balance sheet to the creditors on the liability side. Our next account is sales, and also we have returns inwards. So we will deduct return inwards amount from the sales amount and mention these two on the credit side of the trading account. Next account is closing stock. We will mention the closing stock amount on the credit side of the trading account and also on the asset side of the balance sheet. Next is bad debts. We will mention this amount on the debit side of the profit and loss account. Next is advertising, which comes on the debit side of the profit and loss account. Next is interest on loan, which is an expense. This comes on the debit side of the profit and loss account. Next is insurance, which is an expense. We will mention this on the debit side of the profit and loss account. Next is general charges. These are also expenses. We will mention this amount on the debit side of the profit and loss account. Next is salaries. This comes on the debit side of the profit and loss account. Next is capital. We have already updated. Next is sundry creditors. Even this we have already updated. Next is bank loan. We will mention this amount on the liability side of the balance sheet. Next is furniture and fittings, which is an asset. We will mention this on the asset side of the balance sheet. Next is motor vehicles. We will mention this on the asset side of the balance sheet. Next is buildings. This will come on the asset side of the balance sheet. Next is sundry debtors. We have an adjustment for this, which we have already calculated. Provision for discount on debtors amount will mention on the debit side of the profit and loss account, and we will deduct this amount from the sundry debtors amount on the asset side of the balance sheet. Next is cash in hand, which is an asset. We will mention this amount on the asset side of the balance sheet. Next is commission received, which is an income, and also we have an adjustment for this, which we have already calculated. We add the accrued commission amount to the commission amount on the credit side of the profit and loss account, and also we'll mention accrued commission amount on the asset side of the balance sheet. Next is rent received. We have an adjustment for this. We deduct the advance rent received amount from the rent amount on the credit side of the profit and loss account, and we will show the advance rent amount on the liability side of the balance sheet. Our next adjustment is charge interest on capital at 2%. We mention interest on capital on the debit side of the profit and loss account, and also we'll add this interest on capital to the capital amount on the liability side of the balance sheet. Still, we have two adjustment amounts to be updated. First is loss of stock by fire. We mention 1000 on the credit side of the trading account and also on the asset side of the balance sheet. Next is manager's commission. This we can calculate after balancing the trading account and profit and loss account. Let's balance the trading account. For trading account, we get a gross profit of 95,900. We transfer this gross profit to the profit and loss account. And for profit and loss account, we get a net profit of 44,180. On this amount, we will calculate 8%, that is manager's commission, which comes to 3,273. This amount, we will mention it on the debit side of the profit and loss account and also on the liability side of the balance sheet. For profit and loss account, we get a net profit of 40,907. We'll add this net profit to the capital amount on the liability side of the balance sheet. And we get 2,23,000 on both the sides, that is on the asset side and as well as on the liability side of the balance sheet. Hope you guys have understood the explanation. If you guys think this video is helpful or useful to you guys, do not forget to click on the subscribe button, and also if you have any questions, please don't hesitate to post them in the comment section below. Thanks a lot for watching this video.